Hello and welcome to another update video about gold. Gold futures. Here we can see that the price is currently working on the fifth wave to the upside. We have a break above our initial resistance area. The signal line was broken here at $2,923. This is very important. And why is this important? Because this was our signal that the fifth wave has started. Remember that the yellow scenario told us that most likely in this area here we would find support and start the fifth wave up. This area between $2,800 to $2,883. I assume the fifth wave has started. If the fifth wave really has started, then how would the microstructure really look like? We need to talk about that. And what would be reasonable targets to the upside? I'd say we can talk about those as well. Let's talk about those potential targets. We need to adjust them slightly just. So based on microstructures here. So next Fibonacci extensions to the upside, 2,994, 3,042, 3,090. These would be the next main resistance levels to watch here for wave 5. And that could complete the larger degree third wave, so a substantial top up there. Assumption is this is going to be the last rally of this 5-wave move that actually started in December. Yellow scenario is preferred, in which we have a wave 1, a wave 2, a wave 3, 4, 5. White count is possible, which is slightly different. A wave already topped. It might be a B wave still in the making. A, B, C. If we break down now, it's likely going to be the white count, okay? And the support area remains relevant then for the lower it's a lower support basically for a wider B wave. Let me shift that to the right, but that remains a reasonable alternative. A B wave, then a C wave up, but that would be a very protracted A, B, C, then up. Okay, but for now, yellow scenario remains preferred, and we just need to understand what would be the microstructure of this move to the upside. So, quick reminder: we're dealing with an overall diagonal pattern. And if we're dealing with a diagonal, then we're tracking here an ABC structure. So best I can tell is we had an A wave up, a B wave, and now we're moving in a C wave. Probably only going to be the initial move up, and that could just form a larger A wave, then wave B and C. So 3 waves in A, essentially, as it looks like. And it kind of makes sense, because if we make that larger, then I think you can see that this is a 3-wave move up in A itself. A, B, C in A. Then the B wave triangle, and we're now working on wave C. And when that's completed, the B wave could start, and then the C wave up. So essentially, because we're dealing with a diagonal, the subwaves are all corrective. What I can track here is the ideal target for wave C of A. We do that by taking the length of the initial A wave, go to the end of the triangle, and that would be an ideal target zone. So let's see if the price can get there and complete wave C of A. From there, the B wave pullback should ideally start. So it's the area between $2,956 and $2,994 would be an ideal target for this C wave. So no change to outlook here overall. Resistance, there's also probably going to be some structural resistance in this area. We can, for example, add the VRVP volume profiles, point of control, pretty much where that 100% extension level is, so around $2,950 could be some strong resistance. It's not only the 100% extension, it is also the point of control where we could get some additional resistance. So that's the update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thank you very much. Bye-bye.